Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that you can use to get yourself funded. Now, in order to get yourself funded, all you have to do is just follow this step-by-step trading strategy, backtest it, collect some data, and then you're ready to go. So I'm going to keep this video super quick and break it down into 3 parts. First, we'll go over the trading plan so you understand exactly what you need to do. Second, we'll do some trade breakdowns so that you can have a visual representation of exactly what you're looking for. And third, I'll leave it up to you guys. If you like this video and you want me to do a full back test to go in depth into all of the results, then all you have to do is simply like this video and let me know down in the comments. If I get more than 100 likes, then I'll do a full back test, but that will be the third part of the video, which won't be in this video itself. But without further ado, let's jump straight into this ICT Forex trading strategy to get you funded. So this trading strategy is so simple that it only has 4 steps on the checklist. So we'll go over the checklist and I'll give you this example on the left side of the screen so that we understand exactly what we're looking for, and then we'll jump onto some real life examples. So first of all, we're waiting for a sweep of the previous daily candle high or low. So the first thing you're going to do when you come onto your charts is identify yesterday's daily candle on the daily time frame, and you're going to simply mark out the high of the candle and the low of the candle. Now, if there's a wick, you're going to mark out the top and the bottom of the wick. If there's no wicks, you're simply going to identify the bodies. So once we've done that, we're then going to wait for a sweep of the daily high or the low. Now, only one of them will get swept first, so we're waiting for either one. Once we get a sweep, then we're simply going to be looking for a 5-minute market structure shift. So as we can see from this diagram, if we sweep the high of the previous daily candle, then we're waiting for a 5-minute market structure shift where price flips from bullish to bearish. Now on the flip side, if we sweep the low first, then we're simply waiting for a 5-minute market structure shift where price flips from bearish to bullish. Once we've done that, we're then simply going to take our entry at the order block or the fair value gap that caused the market structure shift. And last but not least, we're going to make sure that we target a 1 to 2 risk to reward, and that's it. That is our 4 steps for this simple ICT strategy. So now that you guys have seen this example and this diagram right here, let's actually jump onto the charts so that we can get a real life example. So step 1, we identify the previous daily candle's high and the previous daily candle's low. Next, we drop down to the 5-minute and then we wait for a sweep of that previous daily candle high or low. Now in this case, we got a sweep of the low and then we waited for a 5-minute market structure shift. So if we identify structure, we can see that price is creating a series of lower lows and lower highs. And then price comes and gives us this lower low all the way at the bottom, which was the lower low which swept the previous daily candle low. After that, instead of price putting in a lower high and then a continuation lower, what we actually got was a brand new higher high, and price broke the previous lower high. This means that price has flipped from bearish to bullish, and now we identify the breaker block which caused the market structure shift. But remember, we can take our entry at the fair value gap or the block or the breaker block that caused the market structure shift. So in this case, we took our entry from the breaker block and we put our entry right there at the open. Stops go below the low, and we were targeting a simple 1 to 2. So as we can see, this was a 1 to 2 trade. Price comes back, taps us in, and then it runs straight to take profit. So it's nice and simple. We're just waiting for a sweep of the previous daily candle's high or low. Then we're waiting for a 5-minute market structure shift, taking our entry at the order block, fair value gap, or the breaker block that caused the market structure shift, and we're simply targeting a 1 to 2. So let's go over a few more examples so that this really gets solidified and we know exactly what we're looking for. Step 1, we're going to mark out the previous daily candle's high or low. Now, once we've got that, we're going to drop down to the 5-minute and we're simply just going to wait for a sweep of either the high or the low. So this is our trading range, and now we're going to wait for a sweep. So if I play price on, we can see that price goes and it gives us the sweep right there. So now that we've swept the daily candle low, we're now going to identify our structure. Well, if we take a look at what structure is doing at the moment, we can see it's created a lower low, lower high, lower low, lower high, and then a brand new lower low. Now, our anticipation is that price is going to give us a lower high and then a continuation lower. However, in this case, we can see that price gives us a brand new higher high and breaks the previous lower high, signifying that we've had a market structure shift from bearish to bullish. So once we've identified all of that, we can then make sure that we find our fair value gap, order block or breaker block that caused the market structure shift. We put our entry at the open, stops go below the low, and then we're simply targeting a 1 to 2. And now if I play price on, we can see that price comes back, taps us in, hit our take profit. So again, not all trades are going to be super simple, quick in and out. Sometimes they do take a bit of time. So we got tapped in right here, and then from there price hit our take profit all the way here. So it took around 10 hours for this trade to actually hit our take profit. But the point is that we hit our take profit. Now, all it is about simply replicating the same trading plan and checklist every single day and just following that regardless of the outcome. If you've backtested the strategy, you'll know that there is a particular win rate. Now, let's say that this strategy has a 60% win rate. That means out of 10 trades, you're going to win 6 and you're going to lose 4. Now, that's not something you can run away from. You're going to encounter 4 losses. And that's simply just part of trading. When you're trading, you're going to have good days and you're going to have bad days. But if you just follow your trading plan, you know that overall you have a winning strategy. What this means is that even if you take a few losses, you know, in the long term, you're going to make more money than you lose. And as a trader, it's very important that we understand this, because if you don't, you're going to get lost in the noise and then you're going to get shiny object syndrome. Now, this is where you have a few losses and you think, oh, the strategy doesn't work. And then you jump onto the next shiny strategy that you see on the internet, which is going to end up with you doing the exact same thing. You're going to take that strategy, go onto the markets, trade it a few times, win, and then you're going to have a few losses, which happens with every strategy. And then again, you're going to think, oh, this strategy doesn't work. Then you're going to find something else on the internet and continue down that same path over and over again. And if you do this, then what's going to happen is you're going to spend the entire year having gone through 20, 30 different strategies, and you're not going to be profitable. And the reason for this is because you keep getting shiny object syndrome. And all you really need to do to counter this is find a strategy, backtest it until you've found a good win rate, and that's it. Make a trading plan and follow it. If you just follow your plan and stick to it, regardless of the outcome, you're going to be profitable and consistent, given that it is a winning strategy with a good win rate. That's all it takes. No strategy is going to give you a 100% win rate, and no strategy is the holy grail. Find a strategy, backtest it to get a good result, and then just run with it. Don't get disheartened if you have a few losses. Everyone goes through that. I go through that. Everyone I know goes through that. It's just part of the game. Let's go through this last scenario as if we're actually taking this trade together. So we've woken up, come to our charts, identified yesterday's daily candle. Then we're going to mark out the low and the high of this candle. And then we're going to jump down to the 5-minute and wait for a 5-minute market structure shift after we've had a sweep of either the high or the low. So if I play price on, we can see that immediately we get a sweep of the low. So now what we can start to do is identify structure. Well, as we can see, price has given us a series of lower lows, lower highs, lower low, lower high, and then a brand new lower low. Therefore, in this instance, we need price to break above this previous lower high and give us a brand new higher high. This will signify a market structure shift from bearish to bullish. Then we can take our entry and ride this new trend all the way up. So that is what we're anticipating. That is what we're looking for. So what we're going to do is identify that right there is where we're going to get a market structure shift. So if I play price on, we can see that eventually price goes up and actually gives us a market structure shift right there. So once we've got this, we're then going to identify the area of interest where we're going to be taking our entry. Now, again, we can take our entry from a fair value gap, an order block, or a breaker block. Now, in this case, I really like the look of this fair value gap. It's inside of this impulsive candle to the upside. So we're going to take our entry right there. Stops go just below the low, and we always target a 1 to 2. So we're targeting a 1 to 2, and that is our trade right there. So if I play price on, we can see that price comes back, taps us in, And then we're simply just going to wait for our take profit to get hit. And as we can see, eventually price goes up and actually hits our take profit. So altogether, that took a grand total of 5 hours and 50 minutes. Now again, no trade is going to be simple. There's going to be times when you have to go break even and you might get taken out of break even. There's going to be times when price is going to tap you in and it runs straight to your take profit. There's going to be times when price taps you in and runs straight to your stop loss. But you can't let that dishearten you. You simply follow the checklist. So in this case, we had a sweep of the previous daily candle low. We then got a 5-minute market structure shift. We took our entry at the fair value gap that caused the market structure shift. And then we targeted a 1 to 2. So that checked off our checklist for our trading plan. We executed and we won. Now, if I play price on, the funny thing is this trade actually ran all the way to the previous daily candle high. So if we take the risk to reward on this trade was actually a 1 to 5.9. That means for every $1,000 you risked, you would have made $5,900 if you were targeting the previous daily candle high. Now, I don't recommend that. I recommend that you target a 1 to 2 because that is a more realistic target and price never usually runs all the way to the high after sweeping the low. But on the days that it does, if you had a runner on, then you would have made some decent profits, right? But by now, I hope you guys have a clear understanding of exactly how to trade this strategy, the trading plan, the checklist, and all of these examples should really solidify exactly what you're going to do when you jump onto the charts yourself. Now, aside from this, I would highly recommend that you go and do some back testing to really figure out if this strategy is the one for you. And again, like I said, if you want me to do a back test to showcase how good this strategy actually is, then all you need to do is like this video, let me know down in the comment section. And like I said, if I get 100 likes on this video, I'll actually go on and do a full back test. But on that note, guys, I hope you did enjoy this video. And if you did, don't forget to leave a like, comment, and subscribe. But I'll catch you guys in the next video.